The theme being consumption, and now with the monsoon forecast fueling hope for rural demand, factors relating to rural degrowth, are they behind us? These are the kind of questions that crop up in every investor's mind. And with the state and general elections, are they going to result in higher rural spending? Will the sector growth really rebound, led by the rural economy, in the light of some of the FMCG stocks, the kind of run-up that they have in the recent past, and more importantly, also in the recent light of, say, Anand Mahindra's tweets just yesterday, wherein he talked about as to how his group companies, which are largely rural-based, are already beginning to show signs of a green shoot. So let's just understand as to what do these parameters really entail when it comes to pure-play FMCG companies. We've got on board with us Sunil Alagh, the chairman at SK Advisors, former MD and CEO at Britannia, joins us on the show right now. Sunil, hi, good morning. Sunil, pro-growth stance and the SOPs from the government, given that this is an election year, or rather the penultimate year to an election year, are a sure shot recipe for strong rural demand. Do you see rural demand outpace urban in the coming years?
Well, I mean, at least for the next 1 to 2 years, I see it outpacing, because it was outpacing till last year, and then it became a little static, and the semi-urban and urban took over. And I think now with a good monsoon, the main thing is with a good monsoon and the government schemes of giving the farmer that 100 plus 50%, let's not forget, and also the health scheme which the government has introduced, all this is going to make all the rural demand go up. And in an election year, whether we like it or not, a lot of money is given to the poor, whether it's through legal means or otherwise. And therefore, I see this year as a massive increase in rural demand compared to last year. And the year before, when you had demonetization and GST, all that is settled now. A good monsoon is all that is required, and you watch that how the rural demand will go up, because people in the rural markets don't really save. Whatever money they get, they tend to spend, and if spending starts, then consumption goes up, and consumption goes up, then it automatically helps industry. So most food companies have always been, as far as I'm concerned, stocks which never go up or down too much unless it's very badly managed, and they are the safe stocks to buy unless you are speculating. If you're looking at the 1 to 2 year period, I think most food companies are great to go in with, including the other FMCG companies as well.
Okay, I'm glad that you're giving us those stock recommendations too, Sunil. Do we have Sanjay Manyal with us? Okay, we will get on board Sanjay Manyal as well from ICICI Securities in just a bit. But Sunil, just on the point that you were making, while the SOPs from the government have already come in the form of higher MSPs, infrastructure spends, by when do you see these have a meaningful impact on rural income? Because like you rightly pointed out, what we need is a higher rural spend coming by, not just an economic growth which only translates to numbers, but it has to translate to spend, and that's going to benefit FMCG companies in turn.
I think the first half is going to be hope, and the next half is going to be reality, because the money to the farmers are going to come in only after the monsoons, this 100 plus 50%. And also the health scheme, where mostly the rural areas were very worried about putting some money aside for someone falling ill, that also is going to start from October. So I see the first half will come in because either we have good rains and that will bring in hope, and then the second half comes in when reality touches in. Now, if those two schemes are badly executed, then you got to take another review about rural demand. But as things stand, there is no reason why they will be badly executed, because it's an election year and Mr. Modi is bound to make it work. So I see a big boost in the second half, and the first half is going to be more or less on hope and the second half on reality, if I can put it in very simple terms.
And so, Sanjay, just highlighting what Mr. Alagh just pointed out, do you think that in anticipation of that reality coming through, we would see perhaps an extended hope rally for FMCG companies, FMCG stocks?
So yes, because what we believe that FMCG stocks will be in the highlight because of the 2-3 things. It's an election year in 2019, and we have seen even in the past, even in 2008-9 when there was late loan waiver, or when there was a extended spend on Narega, rural growth really came off, and in fact, rural growth was pretty robust, specifically in 2009-10, and even for the another consecutive 2-3 years. I think we believe that the government's effort towards doubling the farm income probably would start fetching results from this year onwards, because as I told you, it's an election year, and government will be really focusing on increasing the rural income level, and that really percolates down to the better growth for the FMCG companies. And we are coming from an year which was dampened by the demonetization and the introduction of GST. So we have the low base as well. So we strongly believe that the rural growth would really come back this year, and we really can see the good volume growth across companies which are having a higher contribution of rural sales.
Sunil, the growth for FMCG companies in late 80s and early 90s was a function of reach. You know, what Mr. Dadi Seth was able to do to HUL and what you were able to achieve for Britannia. Now, reach and penetration is no longer a challenge. FMCG products are available in every taluka, every kasba, every nook and corner of India. So, do you think now the challenge is only going to be about generating volume growth?
Yeah, because initially it was width of distribution which was required. Now we need depth of each consumer. If they're buying one packet of biscuits, will they buy two? Or will they move up from just buying a glucose biscuit to more of a cookie, which again gives higher profit margins to companies, because the aspirational levels of companies are going to go up. So there are two ways in which this is going to, growth is going to come in. One, depth. If you are buying only one soap or buying one packet of biscuits, you'll buy two. The second is if you're buying the same thing, but you say, no, now I want to buy something which is even better. And in any way, the semi-urban is already looking at health products. Look at Patanjali's growth. Look at all the companies that are there which are promoting. And if everyone pushes for this together, then you are going to see an aspirational level move up. And also, if people can't afford it, then at the same level, buying more of the same product. I mean, the second TV which you were saving for, or the first TV which you couldn't afford, will all start. I mean, that's what we'll need to look at, So that's where we are right now. And I think main thing will be monsoons, definitely. And if the monsoons as predicted will come with, how weather forecasts are, and we all hope and pray that it's okay. But if the monsoons are bad, then we've had it. But if the monsoons are good, then the second half rally is going to be much higher than the base which we set for ourselves last year.
Which are the 2 or 3 categories where you are in general very bullish on, whether it could be because of the GST shift or change in per capita? Where do you think there is, according to you, proposition of 7-8% volume growth for next 2 or 3 years?
The way I look at it is dairy. And definitely agricultural products, in the sense that whether you are selling pesticide, insecticides, tractors, which are going to be required by all of them, food and dairy. I mean, these are I'm not a great market player, but I would say these segments are safe bets, in the sense that there's nothing that can go wrong. The more the people are, the more they're going to eat. So I don't see why even people think whether any food company is going to do badly unless it's badly managed, as I said in the beginning. So you will see the whole sector grow, in which some companies will and some companies won't, depending upon what their strategy is.
I bet you've chalked out that list of which companies are likely to do better than the others within the FMCG sector. So what is your list like? What are the top 3 stocks that you believe can still be bought?
Going more and more on food and less on tobacco. That's one company which is really, and there are going to be a lot of IPOs. Now, one more thing I'm going to say, you will see the second half, a lot of IPOs of privately held companies, which are food companies, coming into play. And when they'll come into play, that will give the investor a lot more options, rather than just sticking to 1 or 2 of the traditional companies which have already become highly priced. And therefore the growth prospects on the pricing may be a little lower, but all new companies which are, and I'm almost sure that there'll be at least 3 or 4 in the food companies which will go in for IPOs in the second half. And you should wait for that.
Okay. Sanjay, what is your list looking like? Sunil has given us enough hints, and he's talked about 3 to 4 players which may actually hit the market as well in the near future. But what is your pecking order within FMCG?
So we remain positive on the packaged foods, entire packaged food category, so we remain positive on the entire packaged food category because that's still a very low penetrated category. We have seen the detergents and shampoos and soaps have been highly penetrated, but packaged food is a category which would probably witness a strong growth and can see a consecutive 2-3 years of good growth in terms of volume. So we remain positive on the FMCG business of ITC. We remain positive on Nestle. We remain positive on some of the other companies which specifically in last 2-3 quarters we have seen somebody like Marico has been able to has seen, despite having a 80-90% kind of increase in the copra prices, they have been able to manage the operating margins. So we are positive on Marico as well.
Inflation is something that is going to be a key variable to manage, Mr. Alagh, when it comes to a lot of the consumer companies, which can impact their margins going forward. That's a big talking point currently. What are you mapping in terms of rising raw material prices and how that may impact operating profit margins for FMCG companies?
Well, my advice to all food companies is that don't lose market share. Just because your profits come down in 1 year, you'll make up in the second and third year, because once you lose market share, and then getting it back is very tough, because all competitors are coming in, and therefore even if certain companies maintain market share and drop their profits, I'm sure the market will look at it aggressively and say, look, this company knows where it's going and I don't see a drop. So unless if you're really making a high margin and if you make a less margin to protect your market, I think everybody should understand why that company is doing it. So I don't see, if there's a pressure, let the market forces play, because anyone who is unable to withstand the pressure is going to collapse, and therefore the question of the consumer will buy what he can afford. Remember that. You must go back to what the consumer can afford, and then make sure that you have products which he can give it, and not develop products the other way around and hope that the consumer buys it.
Sanjay, are you going to be then, taking a lead from what Mr. Alagh just said, are you going to be looking at FMCG companies seeing greater expansion in volumes versus a price rise? So a large part of the top line growth will come in from volume enhancement than pricing.
Well, if you see, most of the FMCG companies in last 3 years already sitting on a pretty high elevated margins, and so obviously the focus would be on the volume growth because they're already sitting on a very, very high margins, almost 100 to 200 basis point higher than their last 10-year average. So what we believe that focus will be on the volume growth, specifically when we are coming from a year which was impacted by a lot of headwinds like demonetization and GST, and so volume growth was pretty low last year. So we believe the pricing growth, and specifically one has to understand that specifically because of the anti-profiteering clause, most of the companies have really passed on the benefit of GST, specifically after November 15, when government really reduces the GST rate for many products, many categories. So we believe that pricing will not be the growth driver. It will largely be the volume growth.
Okay, that gives us a 360-degree perspective on what to do with approaching investments in the consumption space. Thanks very much, Mr. Alagh, as well as Sanjay, for joining in and giving our viewers that perspective. Really appreciate your time and your thoughts.